It's been a phenomenal day for the stocks of automotive companies, especially the heavyweight OEMs. But at the same time, you had a not so optimistic, not so buoyant note and observations coming in from the analysts of JP Morgan. They've released a new note called Back to the Basics, especially focusing on the two-wheeler industry, the domestic two-wheeler industry. And they believe it's not likely to be a smooth ride going ahead, especially for Eicher as well as for Hero MotoCorp. Now, they've done extensive channel checks. They've talked to industry stakeholders and industry insiders as well, and they believe that the volume tailwinds, which is pent-up demand, channel restocking, preference for personal mobility for the domestic two-wheeler industry, these are essentially starting to recede now. These benefits going to fade away going forward and perhaps are not sustainable according to the analysts. Looking beyond this, demand fundamentals for two-wheelers also appear a bit vulnerable. Affordability has been hit according to them. There's a bit of a concern on the financing front as well, and margin headwinds like raw material inflation, fading pricing power because of heightened competitive intensity. These are also key headwinds that seem to be emerging as a threat for the two-wheeler industry outlook. And after a steep year-to-date run-up that the stocks have seen, especially the two-wheeler stocks, analysts at JP Morgan do not see risk-return trade-off favorable in the two-wheeler OEM universe, except for that of Bajaj Auto. They have downgraded Hero MotoCorp to neutral. Their earlier rating was overweight. The stock, according to them, is trading near fair multiples, and any meaningful re-rating from here will need conviction on premium bike scale-up and a better industry outlook, according to the analysts at JP Morgan. On a relative basis, they do like Eicher, or rather Royal Enfield as a brand. They have, however, downgraded Eicher to underweight versus their earlier stance of neutral for Eicher. They like Royal Enfield's brand, the refresh strategy, category growth potential, but the valuations, according to them, appear high, especially after the 25% rally that the stock has seen in November. And there could be some downside risk from supply execution. In the near term, at least, they believe that this could actually pose a bit of a concern. They keep neutral on TVS. They believe valuations, earnings adequately discount the better product story. Margin scale-up is something that they would be watching out for, and they would wait for a better entry point for TVS Motors. But largely, the view on Eicher and Hero MotoCorp does not seem to be too optimistic at this juncture. Valuations definitely seem a bit of a concern for them. For Hero MotoCorp, like I said, premium bike scale-up is something that has to really work out in a big way for them to relook or the stock to re-rate at this juncture, given the fabulous run-up they've seen. They've also rated Bajaj Auto as the only two-wheeler stock that they are overweight on at this juncture within the two-wheeler space. Firstly, because the valuations are very attractive. They see it as a better play on full reopening as well. A lagged, albeit strong pickup in export volumes and improvement in domestic three-wheelers of a depressed base will be the key catalysts for Bajaj Auto. So these are the key views expressed by the analysts at JP Morgan. The stocks, however, seem to be unperturbed in today's trading session, with the entire auto basket soaring in trade quite a bit.